Hi, everyone. It is Tuesday, February 1st, and we are bringing you a special breaking news edition of Quick Takes. KOHO announces a $210 million round, which makes this one of the largest fintech funding rounds ever raised in Canada. Joining me now is TechTO co-founder and co-host of Quick Takes, Alex Norman, to help break this down for us. Hey, Alex.
Hey, Alex. Good. How are you?
I'm good. I'm very excited to hear your take on this. So can you break down this news and let us know what all this means? Take it away.
Okay, maybe I'll start with the news. So earlier today, KOHO announced that it closed a $210 million round led by Eldridge with participation from existing investors Drive Capital, TTV Capital, Hoop, Round 13, and BDC, among others. But, instead of me breaking it down, I've got someone that might know a bit more about what's going on. I've got KOHO CTO Jonathan Klein, who's ready to join us.
Hey, everybody.
Hey, Jonathan. How are you?
Doing great.
Have you had a busy day today?
It's always a busy day at KOHO, but yeah, today's been like a little extra busy for sure.
Yeah, so maybe you can start off by telling us who is Eldridge? Like, this is a big round, and I'm not familiar with this investor, so would love to hear a bit more about who's led you around.
Yeah, so Eldridge is a big sort of holding company and investor based in Connecticut in the U.S. They have some investments you've probably heard of. So they're investors in Stash, Wealthsimple, Alpaca, a bunch of other companies. So we really feel like they're a value-adding investor for KOHO.
So that's interesting. They love the fintech space, I guess.
Yeah.
And so,
yeah,
like, how did this round come together? Like, it seems like it was only a year ago that you raised a massive $70 million round.
Yeah, we get that question a lot, right? It's like, why raise 210 right after raising 70? I think the simplest way to put it is, make hay while the sun shines. Like the market today is really, really good for companies to raise capital. And the other piece of this too is there's macro uncertainty, whether that's COVID or inflation or et cetera. There's a lot of macro uncertainty, so we felt like it was a great time to fill up the war chest and give ourselves a ton of runway and a ton of flexibility to continue to grow the company for years to come.
So I love that you said, "Hey, uncertainty. We've got I guess good results. Let's go get a bit of a war chest." So how do you get a new, like, usually when I hear that, it's like, okay, let's go back to our current investors and let them raise. So how did you guys get introduced to Eldridge, or why were they interested? Like, I'd love a bit of a backstory there if you can share.
Yeah, totally. So we did a pretty thorough search. We talked to dozens of investors. Our CEO Dan spent sort of months doing the circuit and talking to everybody he could, pretty much trying to get great terms and great partners. That's kind of how we think about it, right? It's like you want people you want to work with every day, because the new lead investors are going to get board seats and you're going to be working with them on a day-to-day basis. And you also want the right terms, the right valuation for the company. So we did run a full process. And then, as you mentioned, a bunch of our existing investors also put in more money into the company.
Yeah. So like you said, you did 70 million last year. This is 210 million now. It's impressive, because before that, I think you only raised about 50 million. Tell us what's changed since your last raise, because I think I read when you raised in March last year, you had 350,000 users. Where are you at today? What's new what new products have you launched? What changed over the last 9 to 12 months?
Yeah, a lot's changed. So we went from 350,000 accounts to over 500,000, so almost doubling accounts in the last 12 months. We also launched a bunch of new products. So credit building is probably our sort of new flagship product that's getting great adoption, which is a pretty simple product. You pay $7 a month and you build your credit. So the average user is seeing about 20 points of credit score increase across a 6-month period, which is super valuable for a lot of KOHO customers. So that's number one. The other thing we're leaning into really heavily now is this product called Instant Pay. Now, we believe that the biweekly pay cycle is going to go away. People should get paid every day, right? You work every day, you should get paid every day. So that's the product we're investing in a lot right now. And the way that works is we partner directly with employers. We get the data from employers around time and attendance and payroll, and then we can advance that money to KOHO users through Instant Pay for free. So we don't charge any fee for this. And then we get repaid when the user gets paid through their normal payroll. So this is like the concept here is like destroy the payday loans industry, this like predatory industry that charges incredibly high fees by charging zero fees for this service.
So that's interesting, because if I go back several years, you started off with the debit card and then you have a savings account. So now you're going to more full stack. I'm just curious, could you tell me a bit more about this credit building? So like, how does it work?
Yeah, so the way it's implemented is as a line of credit. So we offer our users a line of credit, and then we automatically utilize it at 30% utilization, which is sort of optimal for building your credit score. And then we like strongly encourage users to not draw down the funds and spend them, because if you do that, then it will hurt your credit score. But assuming that users sort of use the feature as intended, which is you have fixed utilization, you don't draw down the funds, and they're automatically repaid, then it can really boost your score.
Interesting. Just curious, is this particular to Canada, or would this apply across the globe? I guess you only have Canadian customers, but
yeah. So today it's only Canadian customers. We work with TransUnion, which is one of the big credit bureaus, of course, from the US and Canada. And so that's what we're reporting the activity to, and that's why the score moves. So this product would certainly work in other markets as well.
Cool. So since like your last raise, you've basically increased customers significantly. You've added new products. And it seems like you still had money, but you now gone raised 210 million. So what are you going to do with all this additional capital?
Hire more engineers, right? That's what everybody does. I mean, if you get excited, I think like a huge part of this is growing headcount. So the KOHO team today is about 250 people across the whole company. We're going to grow that to around 400 in the next 12 to 18 months. So we do want to do a ton of hiring. Obviously, some of that's going to go into marketing as well. We're still trying to acquire customers as quickly as possible, sort of in as affordable way as possible. But really, it's all about growth. It's all about growing the team and growing the customer base. And
so let's talk a bit about growing the team. So, like you said, everyone's trying to hire engineers now. It's a significant increase because you're talking about almost not doubling, but like increasing your team by 60%. So like, what are you trying to build? What's a team like? What's a culture? If I join KOHO as an employee, what should I expect?
Yeah, so I talk a lot about building the best team in fintech, and we really want to build a world-class team. And for me, that means having a really high talent density. So even though we are growing the team a lot in absolute terms, I care a lot about keeping the bar really high and having a very high-performing, sort of high-powered, fast-moving team. So when I think about the culture at KOHO that I want to build, it's one of high quality, high velocity, high trust, transparency, and candor. And this is really like how we built the team to date and how we're going to continue to build a team in the years to come.
And is your team distributed? Like, tell me a bit more, like, because I feel like everyone's gone distributed, but are you distributed or like, are you trying to hire in specific geographies?
Yeah, so I actually live in Vermont. I don't live in Canada, so it's like we're fully distributed. The KOHO team, the tech team, originally was mostly located around the GTA around Toronto, so that has somewhat persisted. But we've been hiring all across Canada sort of since COVID, and the majority of the team is actually now outside of GTA. We have people all across Canada. We have a couple people in the US, like myself. We have some people in Latin America. But really the focus is majority of our employees will continue to be in Canada, because our product is in Canada, our user base is in Canada, while also hiring sort of across the Americas within a few time zones of Toronto.
So as you try to build this team a bit, does it help to have someone that's like got financial tech background, like they've either worked for a bank, or is it just, hey, we need curious people and good, that want to change how how financial products are offered?
I think it's both. It's definitely both, right? We need some people that have that experience, especially with the regulatory environment in Canada, experience building banks. And we also need people that just have built great consumer products, right? This is why, Dan went out and found me. I had this background building consumer products at Wayfair, which is a very different kind of a business, but super customer focused, right? And really trying to build fantastic products, which I think is where we start with KOHO. Build a great product and people will come. So we definitely do a mix.
So I'll come back to more about the team and that, but you mentioned something about building great products. So why does someone join KOHO as a user instead of going to one of the traditional Canadian banks?
Yeah. So I think like versus the big six, the story is quite simple. They charge a ton of fees and they don't have any transparency, and it's just really expensive to be a big six customer. So for us, it's all about transparency and no fees. And I think it's just like a slam dunk offering. It's a much better product, and it saves you a lot of money. So that's kind of number one. When you think about, I'm sure like the next question is going to be like, how do we compare to other fintech startups in Canada?
Yeah, sure.
Being the 1,000-pound gorilla in the space, certainly from a fintech point of view. And the way I think about it is that KOHO is trying to be the primary account. So most people deposit their paycheck into one account and then they like route it wherever it needs to go. They pay bills, they send it to their crypto trading platform of choice, they send it to their stock trading platform of choice, right? But it all starts with that core account. And that's what KOHO wants to be. You want to be like the direct deposit core account from which everything else branches out. And then as we layer on more features, whether that's a stock trading product or a crypto trading product or what have you over time, your money's already there. So it's really easy to adopt that feature. It's really easy to stay on KOHO because you already trust KOHO. And when you think about, these other sort of fintech startups that are in a very niche space like crypto, I think it's less likely that the user will say, hey, I put my play money here to trade crypto, and I want to now turn this into my primary account, right? That's just like a big leap to make.
So I don't know if you have a product roadmap you can share anything, any new features we can expect in the next couple of months, or we should be aware of, or at least what direction are you looking at?
Yeah, we think a lot about trading, stock trading, crypto trading, and I think you'll see something come this year in sort of the trading space. Specifically, one thing I'm super excited about that we hope to build someday is fractional stock trading. So we love the idea of being able to offer our users, hey, you can own Tesla for $10, you can own Apple for $10. Yeah. That's super compelling. So that's something that we're thinking a lot about right now.
Okay, I'm going to ask you a personal question. If you could own one fractional share of a company other than KOHO, I'm curious, not that this is trading, investing advice. Is there any favorite company you have?
Maybe Berkshire Hathaway.
No. You definitely need fractional shares for that.
Yeah,
even what's it, the B share? That's the one that's the cheaper one, which is still thousands of dollars.
Exactly.
Yeah. Going back to KOHO, and like from a technical challenge, like what's the big, like what's the coolest or hardest thing you guys are working on?
Yeah, so I'll give like a fairly non-traditional answer to this because there are sort of like big, here technical problems that we're solving. But the one I think about a lot is how do we offer a financial services company with all the regulatory stuff that comes along with that and security stuff that comes along with that while building super quickly and while maintaining our startup mindset, right? And this is something that we have to be super careful about because we win by moving fast. And if we bog ourselves down with bureaucracy and regulation, it's going to be hard to move fast. And so we're always thinking about how do we automate away the compliance work? How do we reduce surface area through things like serverless technologies so we don't have to worry about patching servers, right? To reduce burden on the team. Like all these kinds of things are how we think about maintaining velocity in a world where we are trying to become a bank at some point.
Yeah, I like that because velocity and regulatory compliance aren't two words or two concepts I usually hear in the same sentence. So yeah, that is actually a unique challenge. And then what positions are you currently hiring for?
Yeah, I mean, basically all of them. The big area is that I mean, every team feels like it's growing. We're looking specifically for senior backend developers in Golang. We're looking for sort of DevOps people that know Amazon really well, Amazon Web Services really well, and know Terraform. That's another big one. We're also looking for managers. With team growth comes the need for more managers. So we're looking for sort of line managers and senior managers across the tech team.
And if someone wants to apply, what's the best way to apply? Is it like go to your website?
Yeah, so koho.ca/careers is a good place to start for sure. We're also actually just soft launched a tech blog, so that'd be another good place to sort of check out the things we're doing. Check out koho.dev. So more to come there, but that's also a place to see what we're working on, see if it seems like it'd be a good fit to come work at KOHO, and then obviously we'll link out to job application pages from there.
And what's the process, the hiring process like? Like, is it just apply and then like just give someone a preview if they're interested?
Yeah, we just hand out offer letters and like figure it out later.
In this day and age, that might be what you have to do.
Yeah, I mean, I've heard some crazy stories of what people are doing for sure. So it's a pretty quick process. I mean, we tend to do 3 or 4 different interview rounds. Actually, the new thing we're doing is for the first round, we give the candidates a choice. So they can either do a take-home test, they can do a live coding exercise, or they can talk through an open source project that they've built. So it's sort of like a choose your own adventure approach for that first call. And then from there, we go into our typical sort of like technical and culture rounds. But we can complete the entire process in a week and get to offer within a week.
Wow. I guess speed comes back here, velocity. Anything I should have asked that I haven't?
Yeah, I think you covered it pretty well. I would say it's just like the way I think about it is it's a super exciting time at KOHO and just like a really compelling opportunity. One of the stats that kind of blew my mind is we look at the big 6. In total, their valuation, the company valuation, is about $450 billion, and RBC had $12 billion in profit in 2021. Profit, right? Which is insane. So when you think about, KOHO, I think in the press release we said we're creeping up on that $1 billion valuation, that unicorn valuation. Think about us versus RBC, it's a drop in the bucket, and I really feel like the best days of KOHO are definitely ahead of us, and we have a tremendous amount of opportunity that we can go capture.
I love that. Comes back to growth. Jonathan, thank you for taking some time out of a super busy day. And I'm sure every day is super busy, but especially when you get announcements like this, everyone wants to speak to you. if people want to find out more about KOHO, KOHO.ca, and they can go look at the careers. And I hope to be talking to you again soon. Maybe it'll be 3 months. Maybe it'll velocity in fundraising. You'll reach that unicorn status.
Always
Thank
be
you so
raising,
much.
right? Yeah, thank you.
Cool.
Awesome. Oh, thank you again to Jonathan, and thanks, Alex, for kind of digging in a little deeper on this news. Question for you, entrepreneurs, innovators, founders, and our community who's listening. What are the takeaways for them?
Well, I think there's a few. First of all, not every company starts out as a rocket ship. I think if you go back to KOHO starting, they had to build infrastructure. They had to get regulatory approval. They had to build a go-to-market strategy that worked. So if you look at them, they've seem to be growing faster year after year. They were founded, I think, around 2015, and they've raised a ton of money, but most of it's been since 2019, which reflects the value they've created. They've sort of built the infrastructure, and then they've started going up, and they're accelerating as they get older. So everyone thinks every company just takes off. Sometimes you have to do the right things to grow faster. Second thing is, I think distribution and customer relationships are a strong asset undervalued by first-time founders. I think one reason KOHO has started growing faster and has got these valuation is they went to market with a prepaid card offering like the Visa prepaid card, and have grown, start getting customers. And what they've been managed to do over the last couple of years is to grow that customer relationship with new products like the instant pay and savings account. My guess, didn't ask Jonathan, don't think these numbers will be available, is that these products generate significant revenue. And getting an active customer that has a prepaid card or uses a savings account to get a second or third product is much more cost effective than getting a new customer and activating them. So KOHO now has 500,000 customers that they can cross sell to, and that's extremely valuable. And what's, again, I guess I got a few here. You got strong entrepreneurs, and COVID has changed the financial landscape in Canada over the last couple of years. Imagine if you went to RBC or CIBC or any of the banks in 2019 and said, "Do you worry about any of these fintech players taking market share?" And they probably said no. And now you've got like KOHO and its peers like Wealthsimple and other ones growing rapidly, raising money rapidly, and having the capital to attract customers and, more importantly, attract the talent to build a business. I heard earlier this week that TD is trying to hire 2,000 people. If you were an engineer interested in working in the finance space, would you rather work at TD or KOHO? I may be biased, but I think KOHO. And like we said many times, the Canadian financial services industry is venture size. It's not a Canadian size opportunity. If we had any data about it the last several months with massive rounds raised across the bank, have shown that financial services serving only Canadian consumers is a venture scale opportunity. Those are my takeaways. There's quite a few. This is very exciting to see another big fintech company emerge in Canada. It took time, but KOHO is now one of the players, or has been a player for a while now.
Yeah, and there were a couple other raises announced today as well with Run and League. But we will definitely dive in a little bit deeper when we return on Thursday for Quick Takes. Thank you so much, Alex, for your take. And thank you as well to Jonathan for joining us. There will be a full rundown of everything Alex and Jonathan spoke about in tomorrow's newsletter. If you like these kinds of stories and want to see more in-depth coverage and breaking news as it happens, you have to subscribe to our newsletter, which you can do at techto.org/newsletter. We will see you again on Thursday, February 3rd for our regular edition of Quick Takes with Jason Goldlist and Alex Norman. See you then.
We're in the business of delivering impossible things. We're in the business of delivering things that nobody's ever seen before.
If you build that culture, you'll come up with really cool and innovative stuff, and literally could be in the next multi-billion-dollar idea. So this conversation is largely going to be about scaling yourself and scaling your leadership team.
I want to talk about one of the biggest struggles that I think a lot of startups face early on, which is building initial traction.